How do I qualify for a home loan? Well, there's 4 pillars that lenders are looking for, and if you got these, you're golden. 1, your credit score. So with your credit score, you aiming for a 620. Why? That's because that's where conventional loans start. That's the minimum credit score you need to apply for a conventional loan. Now, if you got lower than a 620, that's okay because you can apply for an FHA loan. They usually range from 580 to 620. And if you're below 580, you can still kind of apply for an FHA loan. If everything else is in line, you will just need a 10% down payment. Number 2, at least 2 years of income. Remember, 2 years of income. And that shouldn't be a problem for anybody actively seeking a house because you know you have to been working to buy a house, right? So 2 years of income. It doesn't have to be from the same job. It just has to be 2 steady years of income. Now, if you switch jobs, it would be nice if it was for a pay increase. We don't want to see you going down. We don't want to see you making less money. So 2 years of stable income. Number 3 is DTI. Now, I know we all heard of it before. Maybe we don't know exactly what it is. It stands for debt to income ratio. It's exactly what it sounds like. How much debt you make versus how much income you make. Your gross income fighting against your monthly mortgage payment. That's your front end. But what the lenders are really looking at is the back end, and that's that 36%. Because the back end takes your monthly mortgage payment and it adds up any other monthly payments you have. Your minimum credit card payments, your car note, your student loans. It adds all that up, calculates it into one debt, and that's divided by how much gross money your household makes. Like I said, the goal is 36, but depending on other factors, the goal can go up to 50%, really. The other factors are number 4, capital. How much money, how much savings do you have? Once again, target the goal 6 months. If you have 6 months in your bank account showing that you could cover the mortgage for 6 more months after closing in your account, golden. Lenders start to do things like lower the interest rate for things like that. So those were the 4 pillars, the 4 things lenders look at when it's time to qualify for a home. 1, credit score. 2, income, job, 2 years at least. 3, debt to income ratio. And 4, capital. My name is Derryel Anderson of Derryel Mortgage, just trying to help you get into a home. If you have any other questions about mortgage, feel free to let me know in the comments. I'm here to help you, but that should answer the question.